Afternoon with me, Ankur Mishra and Kanishka Sarkar. Let's shift focus to PDS. The stock is trading in green, and that is happening despite weak earnings. The company has posted a net profit of 30 crore, which is down 55% YOY. But more importantly, the order book has seen an upswing of around 15% if you compare with last year. To discuss earnings, we have with us Sanjay Jain, Group CEO, PDS. Mr. Jain, I want to understand from you first that positive commentary has seen the rally in the stock per se. What is your outlook in terms of the order book? Are you seeing more orders coming in the second half, and more importantly, GMV?
I think, as you know, that the last 6 months globally have been very challenging. The tariff situation hasn't really been helping the overall retail sector worldwide. And notwithstanding that, PDS, through its multi-country sourcing model, has navigated with the 8% growth in revenue over the first half of next year. And most importantly, as we are entering the second half, our order books at about 5,600 crore are 15% up as compared to same period last year. So we have assured and maintained a strong relationship with the customers, and we believe the second half should see far greater buoyancy than what has actually been prevailing in the first half of the year.
Correct. Hi, Mr. Jain. This is Kanishka also joining in. Just wanted to understand, you said that your order book has grown about 15% on a year-on-year basis, but global headwinds remain. So are you facing any execution delays?
See, firstly, our 3/4 turnover, gets into UK and Europe, and it's after that it gets into US. So we've been on the front end having a very well diversified geographical mix, and also further no single customer being more than 10% of our top line. So we've been well diversified on the front end. And in terms of sourcing, similar model that we've been well diversified sourcing in from Bangladesh, Sri Lanka, India, China, Turkey, and increasingly focusing on Egypt, Latin America. So that allows me flexibility that if there is any disruption in a given part of the world, one is actually able to, because I don't have fixed cost, besides 2 factories in Bangladesh and 1 factory in India and one in Sri Lanka, we work close to 600 partner factories. That gives me a lot of flexibility. And to give you an example, we're talking about a UK and India FTA, and which should lead to a lot of sales getting into UK from Indian manufacturers. And to that extent, we did an acquisition of a facility in Tirupur. Now, not just 1 factory, my ability to partner with far more factories also allows me to stay ahead of any disruption in any part of the world.
Mr. Jain, I want to understand this quarter, what has been the reason for fall in net profit of around 55%? Even your margins have declined around 133 basis point YOY if I talk about EBITDA margins. So what is the outlook there, and what is the reason for decline in net profit?
See, 2 things first before we come to the net profit. Number one, the top line has grown 8%. Number two, at a gross margin level, we have done 25-30 basis point better as compared to the corresponding period last year, which means the engagement with the customer and the realization when engaging with the customer has been, holding well. It is that we invested in the last 2 years into growth initiatives, while on one hand we see an 8% growth in terms of what we derive as a growth from new verticals that we started, whether they were aimed at a new geography or a new product line, have actually witnessed 46% growth. But for an asset-light company like PDS, any such initiative, the investment is through P&L. It takes about 2-year gestation before this new initiative individually become profitable. So now to specifically answer your point, in the first half, close to 80 crores actually got invested into new initiatives. As this ramps up in about 12 to 18 months time, this P&L 84 crore should actually become break-even and profitable. And I think that's where one should see a normalization of earnings and bouncing back of profits.
Understood. So that's the take on profits. But Mr. Jain, you were talking about global headwinds. So majority of your revenue comes from the UK, right? So, could you give us a breakdown of how India-UK FTA is going to impact your business? What's the outlook over there?
Ganesha, it's very interesting. As India, we export about $2.2 billion of exports to UK. This is data from last year. That's on one hand. It's say about 18,000 crore. PDS alone sells about 6,000 crore into UK, but just about 300 crore out of this is sourced from India. The remaining 5,700, as I said, is being sourced from Bangladesh, Turkey, or Sri Lanka. But we've been able to make inroads of exporting 6,000 crore through a multi-country sourcing model. But now to answer your question, this 6,000 crore that we sell into UK is just about 4 to 5% market share of what a retailer is potentially buying globally. That's the potential. So therefore, if India is exporting $2 billion and at 6,000 crore, we are just about 4-5%, India should double up, to exports because of the FTA benefits. How soon are we able to do it? Whether it's take 2 years, 3 years, 4 years, but from a present size of 2 billion, from what it means in terms of the market share, wallet share of the retailer, there's humongous potential. It is all about a careful execution now going forward. So I am very positive. That's the reason we went ahead and did an acquisition of Knit Gallery in India. We felt that India is going to be the next market, and some of our existing relationships in UK, some of the large relationships that we enjoy, the CEOs of those companies have visited India in the last few months. They have been engaged with the factories, our own factory and partner factories, to see how they can increase, buying from India.
Understood. Thank you, Mr. Jain, for that perspective. Let's wait out and see how that scale up pans out. But on that note, we'll let you go. Thank you so much. Lovely speaking with you.
Thank you so much.